Okay, today is Saturday, April 26th. This is going to be a recap of the last week's trading events. I took trades in gold and USDJPY, so I'll be going over each of those markets and what happened over the course of the week. All right, so I'll start with the weekly chart for gold. So last week, gold, it ended up in a pin bar. So it went all the way up and then closed at about the same level last week. All right, so looking at the daily chart, we could be supported by the daily Tenkan Sen right now. It technically closed below the Tenkan Sen and the Kijun Sen is flat. So it could go down and retrace further, but it could also potentially go up. The reason why I'm thinking it could go up is if the scenario plays out, it could be supported by the 4-hour Kumo here. And looking at each of the individual 4-hour candle bars, I see that the sell-off is pretty shallow on each bar where it goes down, whereas the buying is a bit more full-bodied here. So on Friday, the market actually recovered a little bit after the week's events, and that is what put us towards the pin bar. So I expect if there's continued buying on Monday, we could go back to 33.80, which would be the 4-hour Kijun Sen here. If it breaks out of this level, it'll end up forming a double bottom, and it could go up higher. I feel like I traded this market pretty well. These lines are my exact entries and exits. So I bought at the beginning of the week and rode this trend up. And then I exited some of these positions along the way here. So yeah, I had stop losses around these levels. My first position exited on Tuesday. And then I think I exited manually the morning after in the New York session. So those exits turned out to be well placed. The market continued down, although there was some buying along the way. Yeah, I recognized that the market was oversold on Wednesday, and I bought here, and then I exited in the same session on Wednesday for small profits. Now, let me just go in to the 15-minute chart. So yeah, again, I recognize the signal from the Sydney session. So this was a gap up from where the New York session closed. I saw this pattern on Tuesday as well, but it gapped down. Yeah, I recognize as sort of a bottoming P wave pattern here, and then this gap up was the breakout. So I figured it was a bit oversold on the 4-hour chart, so I put a 1% risk trade on to see how far it could bounce if the bounce happened. So it ended up happening. We had a lot of buying action in the Wednesday Tokyo session. For this reason, it was kind of a rebound trade on the 4-hour and daily charts, so I didn't take a very large position, just 1% risk. So the exact area where I exited was, let's see, it was 8:12 p.m. So I saw it sold off. It started going flat here, and then it broke this first level of support, and then I sold after the second support level break. So I should have reacted faster and took my profits as soon as this price went flat here. I tend to want to hold on to my trades a bit too long than necessary. So I could have taken one position off as it went flat, and then another position as the 15-minute broke out of this flag pattern here. But I actually took both positions off after it broke out on the second level, which was a little bit too late. Not too late, but I could have held on to more profits if I reacted faster. I already had the context of the trade in my mind. It was going to just be a short-term trend on the 1 hour at most. So yeah, but this was my first time really paying attention to this kind of rebound trade. So yeah, if I do this in the future, I can improve on that a bit more. All right, so what happened was gold ended up chopping around for the rest of the week, sold off again on the last London session of the week. But interestingly enough, it rebounded on the New York session to close at 33.19. So yeah, I wasn't going to trade gold much going into the second half of this week. I may still stay away depending on how the next week evolves. But yeah, this trend has gone on quite a bit on the weekly chart. And then this last week's candle, it could be a top indicator. But all the lines are still pointing up on the weekly chart. It would have to go flat before it retraces. All right, let me look at the other chart I was following last week, dollar yen. So dollar yen, it looks to be oversold. The dollar looks to be oversold on the weekly chart. So it's forming this, consolidation pattern. The highs are getting lower and the lows are still around the 140 level here on the weekly chart. So I was buying this week, or looking for a buy in anticipation it would bounce here and go back up to 150. I was looking at dollar yen in tandem with dollar CAD. So CAD has, it's more bullish than dollar yen. It technically broke out of these highs a couple weeks ago, the 1.4 level. And now if it does bounce, it'll bounce on this ascending trend line here, which also happens to be the monthly Kijun-sen. So next week will be the last week of this monthly candle. So it'll be interesting to see how that happens. In the long term, dollar CAD is more bullish than dollar yen. But in the short term, dollar yen is more bullish. And I'll go into what I mean here. So let me look at the 4-hour chart. I saw that I was trying to sell this originally last week in anticipation that it would break down further. It did break down, but the breakout was very shallow compared to the weeks before. So at the beginning of this month, we see all the selling action was consecutive candles, very big full-bodied candles. But then on this one, this breakout, it really only trended for 1 or 2 4-hour candles sequentially, and then it started stopping here. So I put a position on last week and then took it off, and then this week I saw that it reversed here. The buying started to be stronger, and then there was actually 2 consecutive legs here. So my third my buys this week was in anticipation of a third leg forming here. So my first attempt at a buy was on the 23rd. That was Wednesday. So I saw this buying action in New York and also the early Tokyo session the day before on Tuesday. So I was thinking on the 1-hour chart, it would likely bounce on the Kijun-sen here. So I put a trade on at the end of the Tokyo session in anticipation that London might bring some liquidity into the markets here. But unfortunately, it went against me on the 5 and 15-minute chart. Let me just show how that happened. So yeah, I bought on this candle here thinking that this was a breakout attempt at the end of the Sydney session, but that was a kind of a fake out, and then it just started going against me. I saw it broke out of this 142.59 level, and I just closed my position at the beginning of the London session. So it looked like it was going down, and if there was liquidity, it would probably be going against me, and that's why I closed that position. That was trade number 8. Yeah, I took a 1% risk and lost maybe less than 1/5 of that, approximately 1/5. So yeah, that was a okay risk trade. The market kind of just chopped around for the next London and New York sessions. And then I tried to put this trade on again the next Asian session, and that ended up working out in my favor. So let me go back to the 1 hour session or 1 hour chart. I saw this candle close, the 1600 hour candle. So this is like a double bottom, ascending, so even better than a flat double bottom. So yeah, I broke out here, and I guess it could continue in this session. So I put the position back on. And yeah, towards the mid Asian session, around 2000 hours, this was the breakout. So this was a very good time trade right here. So I put the trade on right here. I saw it trending in the 15-minute session, these nice retracements and then breakouts here. At the time I bought, it kind of started going back, but I was just waiting until the end of the session to see what would happen. And then, yeah, there was this huge breakout from 142.9 to 143.7, we'll say. So at that time, this breakout happened, and I was able to move my stop loss to break even at 143.143. So this, the reason I placed it here was because it was right at above the breakout levels, and then I just went to bed for the London session. So what happened on the last day, I guess there would not be much action. There could be more breakouts in the overlap session, but being the end of the week, I guess that didn't happen. So there was more buying in this period of overlapping liquidity, but then the markets sold back off, maybe because the week was ending. So I checked the markets again at around 9 to 9:30 a.m. Pacific time. I could have exited my position here. I was thinking whether or not to. If I did, it would just be kind of like a daily trade, and then I would take my profits. But thinking about the risk to reward on the daily chart, I thought to keep this position open. So if I were to exit, I would have exited probably around 10 a.m. here. I did think the market could sell off more, especially if it went below this 143.7 level. It did for a brief period, and then it bounced on this ascending trend line here. So right now on the 1 hour chart, the price is kind of sandwiched between these two ascending support lines. So this first one I drew initially on Thursday, connecting these two lows here. In fact, that's why I bought on Wednesday. I thought it would bounce on this trend line, but it did not. So I just extended this trend line, and then this became the resistance for all the price action after Thursday. Now, after Thursday's Asian session, it broke out again. So I drew a new trend line connecting the Monday lows with the Thursday lows. So this is how I got these two trend lines. Now it could bounce on this secondary trend line, which is also happens to be the 1 hour Tenkan Sen here. If Monday's session opens up, then this would, kind of complete that action, and it would send the price breaking out of the 4 hour Kumo. And then that would start the recovery back on the daily time frame to the daily Kijun Sen here. So let me hide all these lines. Yeah, so if this recovery continues, It could go until the weekly Tenkan-sen or Kijun-sen, the 1, 4, 8 levels. This is essentially what I'm hoping for. Dollar to me has been a little bit oversold in the last month due to trade or tariff concerns. But just looking at the USDX or DXY, this is a very sharp sell-off into support. So it could break down, but it may take more time. So just looking at the very long-term trend, the dollar should usually go up against the other neighboring currencies. It could just be in a range between 99 and 109. So yeah, I'm thinking it doesn't sell off that easily, especially after this period of volatility. That is why I am buying dollar against some of these other currencies. Looking at dollar CAD, this could also potentially be a setup for higher highs. We broke out of this massive, we'll call it triangle range here, that formed all the way back since 2016. So this retracement could be a breakout retracement. And if this monthly candle closes with any kind of wick here, it could be a setup to, new highs around 1.5. So yeah, if I buy dollar, it could be against the CAD these next few weeks as well. Dollar yen is one candidate. It could consolidate here and then start another breakout leg by the time it touches the monthly Kumo. So overall, let's see, I'm up 1,000. I took 2,300 risk on this dollar yen trade. It's already at break even. So now my open profits are about 1K. So that would be half reward to risk ratio. In terms of other setups, I was also looking at the euro. The euro is quite strong and the Aussie dollar has been weak. So on the weekly chart, this has broken out and tested the highs at 1.86. What I'm noticing here is the previous breakout leg had 3 candles of consolidation after the next breakout. So now we've had 3 weeks of consolidation candles on the weekly chart. So it could also break out next week, Euro AUD. So I'll be watching this closely. Going down to the 1 hour chart. If it goes closes above 1.78, I may consider a buy on this chart as well. So yeah, Euro X, this has been quite bullish the last several weeks here. It's just pausing here at the all-time high levels since February of 2021. So AUD could continue to be weak. The weak players I'm looking at for the next couple weeks are AUD, CAD, possibly JPY. And if dollar continues to be weak, then I would expect to see gold resume its uptrend. I talked about this just earlier. So depending on how the daily candles unfold, it could be supported here and continue up. I'll mention Bitcoin. That's a bit interesting. So Bitcoin has been supported on this trend line here, which happened a couple of weeks ago. So it's interesting that Bitcoin is up because it could indicate a return to risk on sentiment after the initial shocks of this week. Yeah, let's look at the US equities market. So this is the NASDAQ. This is, it was a bullish candle this week, much larger than the previous bearish candle week. So it fully engulfed it, and this is looking to be a bounce on the weekly Kumo. So yeah, another sell-off looks to be less likely after this week. We could stabilize around here or continue to go up. let's look at the VIX index. So this has been coming down for 3 weeks consecutively. So mainly the volatility was at the end of March and the beginning of April, and now it's coming down. So yeah, if it continues to go down, then we could expect a lot of the previous trends to resume. All right, so yeah, those are mostly a recap of the trades I took last week and also a setup watch for next week.